Hey everybody, Smart Silver Stacker here. Today's live stream is brought to you by sdbullion.com. Buy your gold and silver from SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/news. So check them out with the link down in the description. Now, we're going to talk about markets in today's live stream. We're going to talk about the possibility of civil disorder here coming up in 2024 because there are a variety of factors, several factors, in play here that will contribute to forcing the Fed's hand back into an easy monetary policy. That will include, in my view, both rate cuts and a return to quantitative easing, very likely, in 2024, and not the least of which is going to be civil disorder and the potential for civil disorder in 2024. So we're going to get into that in today's live stream, some of the other factors that are going to be forcing the Fed's hand. But first, let's just take a look at markets over the past several days, because there is some pretty interesting action. We've got a lot of volatility right now. This is the 5-day chart of the Dow Jones Industrial Average. You can see that on Monday, the 19th there, they were putting in, sorry, what is that, Tuesday the 19th? Yeah, Tuesday the 19th. The Dow Jones Industrial Average hit a new all-time high, and then in yesterday's trading, it actually surged above that in intraday, but then we got a big sell-off at the end of the day as markets closed yesterday. Now today, all the markets, major indexes back in the green. However, you can see they're still well below that all-time high and that nominal intraday high. So what's causing this volatility in markets? What's causing this Santa Claus rally to be derailed? Well, you know, we've talked previously in previous episodes about some of these Fed officials who have been rolled out to kind of do damage control, trying to convince markets that the Fed is not necessarily going to be cutting rates in 2024. This guy, Fed Williams, saying we aren't really talking about rate cuts right now. This right after the FOMC conference, in which Jerome Powell told us that we could be getting as many as 3 rate cuts in 2024, according to the Fed's dot plot. Now, this is the CME FedWatch tool. This kind of tells us what markets are expecting next year. This is the target rate probabilities for the 2024 Fed meeting in March. And you can see that more than 80% of market participants here are expecting a rate cut. The majority of them expecting 25 basis points, 11% now anticipating 50 basis points by March. But this is all that's really driving markets. I mean, take a look at the Shiller PE ratio. So this is a PE ratio of stocks that takes into account the inflation-adjusted earnings over the past 10 years. You can see markets are very expensive right now. So we have a relatively weak economy, an economy heading into recession. And at the same time, we've got very expensive markets. You can see that the only times on this chart that we've really exceeded the current level of 31.85 was in 2021, the stimulus-fueled stock market boom following the latest round of massive quantitative easing, you know, trillions and trillions of dollars of debt bought up by the Fed. And then also in the stock market tech bubble of the late 1990s. And for reference, the highest that this ratio got in the stock market boom of the 1920s, right before the Great Depression, was 31.48. Right now, 31.85. So stocks are expensive here, yet they're putting in new all-time highs. And this is all around anticipation of the Federal Reserve printing money. We've got Generic Stacker in the chat saying it looks like a bubble. Yes, I would agree. It is a bubble, but just because it's a bubble doesn't mean it can't get blown up bigger, and I think that's what the Fed is going to do. Now, let's take a look at the price of gold. So gold getting a little bit of a smackdown yesterday, along with markets in general, but now well above the trading range of yesterday. Well, not well above, but we're back above the range of trading from yesterday. Gold being very resilient here. And again, I think this is because investors are beginning to get the clue that the Fed is going to be forced to print money. Let's talk about why. Let's get into the good stuff here. Has anybody seen the new trailer for this Civil War movie? I saw it the other day, a little alarming. I'm definitely going to go check the movie out. But basically, this movie that's coming out in 2024, I think it's coming out in April or May, like spring of 2024, features a fictional civil war in the United States, a Western alliance of some sort fighting against the powers that be in D.C. Now, some people are saying that this is predictive programming, getting Americans ready for this. I wouldn't go that far. It's certainly interesting timing, though, for this film. And I think we've all seen those polls where, something like 2 in 5 Americans thinks that a civil war is at least somewhat likely. But take a look at this. I mean, Colorado kicking Trump off of the state's ballot. I'm not trying to get overly political here. If you've watched the channel, I'm not some huge supporter of our previous president. Perhaps he's a sight better than the current dementia patient inhabiting the White House. But nonetheless, this guy's just another politician, if you ask me. But the thing we need to take away from this is that when you start undermining the democratic process, and I think it's pretty obvious that this Supreme Court decision here is politically motivated, you're opening up the possibility of civil disorder. Now, the reason I bring this up is because if you recall, back in 2020, during the pandemic lockdowns, everybody was getting a little stir crazy. We had civil disorder. What did the Fed do that time around? Well, they printed up trillions of dollars, some of which was then distributed to the masses in a form of anti-riot money, if you want to call it that. When people start getting out of hand and you've got a printing press and you can distribute checks to kind of try to keep the people in line, well, that's what you're going to do. And I think that we may see more of that in 2024. It's bread and circuses. Never look back in the chat. You're saying now Cali is trying to. Yeah, a number of states now are following up on Colorado's lead here, trying to remove Trump from the ballot. And this, I think, it doesn't take, a genius to see how this could be destabilizing and could lead to some form of civil disorder. And that will mean more printing by the Fed. I mean, they are going to send checks. They're going to do whatever they need to do to keep people in line during this election year. I mean, an election year in and of itself is a pretty good reason for the Fed to goose the markets, to print up money. They're in the, job of keeping the incumbent in there. That is who they answer to. I know they claim to not be political, but I think everybody knows that they are. But now this is going to potentially be civil disorder of a different type than what we saw in 2020. And now I'm not saying this is guaranteed, but that's just kind of the red flag that pops up in my mind when I see politically motivated use of the judicial system like this. So let me know what you think in the comments down below. Probably YouTube not going to be too fond of this topic in the algorithm, so make sure you smash that like button, leave a comment down below, do whatever you can to help this information get out there. But whatever happens with the election, I think there's a lot of uncertainty there. One thing is pretty much guaranteed: they're going to be printing a lot of money. Another reason, as if the potential for civil disorder, I mean, a civil war may be a bit of a stretch, but I think that, it's more likely than it was last year. Let's put it that way. But as if that wasn't enough to get the Fed printing and get the stimulus rolling for the denizens here of the U.S., this is a chart of the Bank Term Funding Program, and you can see this thing is knocking out new all-time highs each week. We're now up to $123.7 billion. This is basically QE by another name. This is the emergency lending facility that was established back in March by the Federal Reserve to help out the banks with their liquidity problems, the banks who are sitting on all of these unrealized losses on low-yielding U.S. Treasuries. Well, they can flip those over to the Fed at par, which is significantly higher than their actual market value, and get a loan collateralized by those bad assets. Now, the Fed's sitting on $123.7 billion worth of those low-yielding U.S. Treasuries. This is supposed to be a one-year facility due to expire sometime in March, but I don't think there's a chance of that happening. I mean, the liquidity crisis is continuing in the banks, and you can see that by the fact that this is marching up to the tune of, look, between November 29th and December 6th, $8 billion monetized by the Fed, because this is basically just the Fed taking U.S. Treasuries onto their balance sheet and putting cash out into the system. It's QE by another name, and expect a lot more of this. In March when this expires, I think they'll probably extend this perhaps indefinitely. I mean, we'll have to see, but more Fed printing on the way, certainly very likely. And then finally, this is not necessarily going to be a catalyst for the Federal Reserve to print, but it will be a blow to the economy. And we're getting set up for a perfect storm here in terms of inflation, because I think it's very likely the Fed will be cutting rates, will be monetizing debt, will be printing money in 2024. And now we have these disruptions to global supply chains. This is the latest from earlier today. More ships to avoid the Red Sea as attacks disrupt world trade, from Reuters. Germany's Hapag-Lloyd and Hong Kong's OOCL said on Thursday that they would avoid the Red Sea, the latest shipping companies to do so after attacks by Yemen's Houthi group on vessels disrupted global trade. Hapag-Lloyd said it would reroute 25 ships by the end of the year, which, is not very far away now. I mean, we're less than, 2 weeks away from 2024, and they're talking about rerouting 25 ships in that time period. Now, how are they going to reroute those? Well, they're going to reroute them around the Horn of Africa. It adds a week or so to the voyage, ups the cost significantly, and this is going to contribute to higher inflation. I mean, if they don't get this situation under control, there's a large U.S. military presence in the Red Sea right now, which of course is also highly inflationary because we got to print a lot of money to fund all of these naval operations. But the fact that despite this military presence, we're still seeing attacks. A Hapag-Lloyd spokesperson said one of the company's ships, the Al Jasra, was attacked near Yemen on December 15th. And now fewer and fewer ships are even taking the risk of transiting the Red Sea. Someone in the chat here saying Maersk. Yeah, Maersk, the world's largest shipping company, is avoiding the Red Sea. As we covered in a recent live stream, the cost to insure ships moving through the Red Sea has now increased something like tenfold, from 0.07% to 0.7%, and that cost likely to move much higher as well. So all around, the cost to ship goods around the world is going to be disrupted. It's going to get more expensive. In the short term, the shipping companies may do well because the shipping rates are going to go up, but at the end of the day, this is going to contribute to higher prices for everything. So inflation is going to be facing an increase due to disrupted supply chains at the same time that the Fed is likely to begin printing money once again. And this is going to be like the inflation of 2021 on steroids. So look, the price of gold right now, near all-time highs. I think it's only a matter of time before we break above this line right here, and then we're going to be moving on to new all-time highs. We still have this massive cup and handle formation, a very bullish formation indeed in the price of gold here. And I believe it's only a matter of time before we break out of this formation and see new highs for gold, probably north of $3,000. That's what I think we're going to see in 2024. Silver probably going to go along for the ride, if you ask me. Gold to silver ratio very high right now, north of 80. That's going to come down, as is typical in a precious metals bull market. Now, will we see that in 2024? I'm not sure. Usually silver is kind of late to the party in these bull markets. It's towards the end of the bull markets that we see that ratio really compress. So that might be, 2025, 2026. I don't think there's any real telling. I don't have a crystal ball, hard to time these things. But silver is still very cheap. I even think gold, despite the fact that it is near all-time highs, is still very cheap. So, I'm going to be looking to add to my exposure of precious metals, getting my hand on the real physical thing, of course, first of all. Also, I think there are some opportunities for those who want to speculate in some of the miners at this time. Those are very cheap relative to the price of the metals themselves. Of course, a bit riskier. And look, I'm not telling you what to do. This isn't financial advice. I'm not a financial advisor. I am just telling you what I am doing. I'm putting my money where the mouth is. I've got some skin in the game, so if you want to know what I'm up to, that's it, and that's my take on these things. That's pretty much it for today's update, everybody. Stay safe and happy stacking. Expect anything in 2024 because things are going to get a lot weirder before they get back to any kind of quote-unquote normal. At least that's what I believe. Catch you next time, everybody. Smart Silver Stacker, out.